What's up, everyone? Atik here. This is my first ever YouTube video, and I'm pumped to share it with you all. Bear with me as I get the hang of things. There might be a few hiccups, but I promise tons of valuable content coming your way. So today we're diving into R multiples and compounding, which I call the secret sauce behind smart trading. Ever wonder how the pros structure their strategies behind steady growth? Well, we're breaking it all down here. What these concepts really mean, what to expect in your trading journey, how to apply them daily for consistent results, and all that good stuff. So let's get on it. One thing, lately I have been getting a lot of DMs about my trading track and our compounding sheet. So I figured, why not walk you guys through it visually here? Which my only goal is to cut through the noise and show you exactly what matters when putting these principles into action. So before we talk about sheet, let me talk about R quick. In stock trading, risk reward ratio, which is all this is about. Risk reward ratio is something measures the potential profit of a trade relative to its potential loss. That's all it is, which it helps traders assess whether a trade is worth taking based on how much they stand to get compared to how much they could lose. That's R. So why risk reward matters? There's three principles, three reasons I think it matters the most. Number one, better trade selection. A good risk reward means you gain more than you risk. Number two, consistent profitability. I mean, even with a 50% win rate, with a 1 to 2 R, you can be profitable. Number three, discipline. Helps traders stick to predefined exit points, which stop loss and take profits. So these are basically the three reasons risk reward matters the most. Ideal risk reward ratio, in my understanding, is 1% risk per trade while looking for 3R reward. It's a conservative way and it's an ideal approach for a steady growth, especially for those who are building an account who are below PDT or just above PDT or struggling to get above PDT. Never ever use more than 1% of your account, especially if you guys are struggling to build your account. 2% more aggressive, faster growth, but higher volatility. 3% extremely aggressive. It is ideal only for experienced traders, not for new traders. Never ever new traders should use more than 1%. So, why this works? Why this idea and approach works? Number one, this approach works because you will have smaller losses during drawdowns. Very important. Number two, larger win scale with account growth. Ideal approach for new traders. Number three, with an account of 30,000, your 17 trades above PDT, which means 17 loss buffer with a 30K account. Even with consecutive losses, you stay above PDT. Yes, your risk tolerance should always align with your strategy and emotional resilience. I personally adjust my R based on market conditions and account size, which we'll talk about it more once we go through the sheet here. Key takeaways: always use stop loss to manage risk. Aim for trades where reward should be bigger than risk. Minimum 1 to 2. My ideal approach is 1 to 3. Combine risk reward ratio with win rate for long term success. Always make sure you guys count account slippage and fees, especially for short sellers. Look-at fees are crazy nowadays. Make sure you guys count those because look-at fees can eat into profits. Daily max loss. I cap losses at 4 hour per day and 1 hour per position to avoid emotional decisions. Always make sure you guys have hard rules, no averaging down, no over leveraging. Mental discipline, which is fear of falling below PDT, leads to mistakes. Always make sure you guys stick to your system. 5,000 above PDT is a decent number, and it gives you the 17 trade buffer, which helps you guys to stay away from mental discipline, which is fear of falling below PDT. And one last thing is to make sure you guys use broker safeguards. Use max loss locks to prevent emotional trading. That's something very important. You use any of those key strategies to make sure you don't get your account blown up. So this was a short brief about R and how we should consider R before taking trades. So what you're seeing in here is an advanced R compounding and tracking sheet, one that I personally use on daily basis. Before taking a trade, I use it to make sure what I'm going to be trading, what I'm going to be risking, and what will be my reward. It's just a picture of the trade. So before taking the trade. Before we dive into the details, let me walk you through the key components of this sheet so you can follow along easily. So right here we have a 30,000 starting capital. It's just $5,000 above PDT, which is an ideal amount to give yourself a shot. And then here we will be tracking the account growth, how much our account will be grown by end of the month. Here we will track the growth percentage, and here it will show the 1% of the grown account. Here we have our daily max loss as a 4 hour, given we're just $5,000 above PDT. Once we start inputting the numbers, all these values will start changing, and even our ability to take bigger risks per trade, the profits, the numbers, all of these will start changing. Here, minus 2R will be minus 600, minus 2R plus fees plus slippage will be minus 750, minus 3R plus fees plus slippage will be minus 1050. So the fees and slippage more talks about short sellers, commissions, and fees. Something you guys should always account for and track them. Plus 3R is 900. That's our ideal approach. While we're risking 1R, the 1% of the account, looking for 3R. plus 4R is going to be 1,200. Right here is showing us the PDT status. We are 17 trades worth of $300 above PDT right now, which is $5,000 above PDT. So basically 17 times 300 will be 5,100, I believe. So around 5,000, give or take. Right here is where we be tracking the profits for the whole month. Once we start inputting the numbers, I will show it here. And at this part, this whole area is where the weekly performance will be inputting the numbers. I will talk about the letter, how I input the numbers from the trades tab. And then here, this is one of the important things I track on monthly basis. Like, what was the biggest plus R I ever had is going to show here. And then what was the biggest minus R I ever had for the month. So here, this area, this is where we will be tracking all the stats, averages, percentages. These are very important to understand how you performed for the week and month. So moving fast forward, just walk you guys through the trades tab. This is where I track every single trade and then how I input those numbers from the trades tab to here. So let's go here. So this is the trades tab, guys. It's very simple, very basic, but I'm tracking the important stuff, what matters. So right here, you put your you put the exchange. Is it NASDAQ? Is it NYSE or OTC or whatever would be? That's where you track. I do track. It matters for me. I know 99% of the time I trade NASDAQ stocks, but still I want to track them. Here you put the ticker. Here you put the setup. What setup did you take at the given date? Here you will put the trade was long or short, the date, number of shares, average in, position value will pop up automatically once you put the average in and shares. And then you input the date and shares and average out yourself here. The P&L, the percentage and net P&L gain will all pop up automatically. You don't have to do anything with these. So this is just simple and basic. I'm not gonna do all this over again. You guys play around. You guys will understand it's simple. Tracking the very basic important stuff. So going back to the our compound sheet, given the month of April for my small account, we can put any random numbers here and then play around to show you guys how the R compounding works. But instead of doing that, we just go straight forward to input all the real trades taken to my small account for the month of April. So the first day of the month, I did not take a trade. So I'm just gonna put 0. The second day, what we're gonna do is how we input all those trades from the trades tab is first we type equals sum, open parentheses, we go to trades tab, we select all the profit and losses that we have taken for that particular day. So it was April 2nd. Now we want to take these two for April 2nd and we close parentheses, enter. And that's how we input every single day for the month of April. So I'm just gonna put a few more and move fast forward equals sum, open parentheses, we go to trades tab, for April 3rd. It's right here, 3 trades. Choose all of them. Close parentheses, enter. Second day was a loss, okay. And equals sum, open parentheses, and go back to the trades tab. April 4th, we had 2 trades, we select both, close. So that's good. We closed the first week green. If you guys been noticing, once we started inputting the numbers, our ability, our risk tolerance, risk per trade keeps changing. Remember guys, this was 17. Now it's 18. This was 5,000. Now it's 5,481. So how much we made is something we'll be showing here. We'll be telling how much we are going above PDT by the day goes on, and as the more we input the numbers, the more these will change, which is compounding. So let me put one more week and then we talk about it. Here you go. So second week, we closing red, but it's not big. It's good. Always keep your losses big. So now I want to go input the week after equals sum, open parentheses. We go to April 14, which is the next week after. Select them all, close parentheses, enter. And we go to Tuesday equals sum, open parentheses. Tuesday was, I believe, 15. Yeah. We go to April 15 trades, which is one trade. Choose that, close parentheses, enter. And then we go to second day equals sum, open parentheses, trade. April 16. April 16 was good. We were green. So we choose them all, close. There you go. Then April 17, which is Thursday, equals sum, open parentheses. Go to April 17. We did really good on April 17. Select that, close parentheses. I believe this was the Good Friday, so no trade. So now, guys, if you guys remember at the very first day of the month when we had no trades, we were only able to risk $300. The 1% of the account was $300. As we started trading, as we made some profits, you guys see how it compounded. So now the 1% is $340 instead of $300. Why? Because our account is grown from $30,000 to $34,009, which is 13% grown. So this number comes from here, and this is the 1% of the grown account. As we progress into the month, remember, we will be risking 1% of the grown account, not the starting capital anymore. And even this right here, if you guys remember, it was 17. We made $4,000 in first 3 weeks. Now that number changed to 26. So now we're way more further from going under PDT. So basically now we are $9,009 above PDT. In other words, if we take 26 losses, each trade worth $340, then we will go under PDT. The chance of happening that is very low. If you guys been noticing even that the daily max loss has been changing, and even the 3-hour return is now $1,020. So if you guys remember, before we were risking $300, for 3-hour it was $900. Since our account is grown and it compounded, now we're risking $340 for 3-hour to make $1,020, not $900. So I will fast forward, input all these data, and see what we will be looking at. I just finished inputting all the numbers from the trades tab. So here, all the numbers started changing. Now, our account from 30,000 grown to $45,810, which is 52.7%. And 1% of the grown account is now $458. It's not 300 anymore because our account compounded and it's grown 52% by end of the month now. Meaning now we have ability of taking bigger risk per trades and looking for bigger profits. So now we are willing to risk $458 per trade, looking for $1,374. Even our daily max loss now is changed to $1,832 because our account has grown. You guys see how compounding works? And here, instead of 17, now we are 45 trades above PDT. Here in dollar volume, dollar amount, instead of 5,000, now we are $20,810 above PDT. Because for the whole month of April, we made a profit of $15,810. We closed the first week strong green, second week was red. It happens, probably screwed up here, that's trading. But we got back to our plan, stick to our system. Meaning we had pre-defined trades here. And that's why we closed strong. But the main point here was the account. How it compounded, how it's grown, how the compounding works. Hope this was helpful. Now let's jump on the stats, how I input all the stats here. So first, before I walk you guys through this part, let me walk you guys one more time with the trades tab. It's very simple and basics. Make sure you guys journal and input every single trade you guys take for the day. As an example, ticker BIAF took a short on April 2nd, 500 shares. Average entry was 335. Position value was 1,675 and closed the same day, same shares. at 245 and made a profit of $450, which is 26.9% win and a 0.90 net gain. So that's how you input all your trades here. Every single trade. Make sure you guys put your setups. What setup did you take? And once you guys do that, then you come here. Let's pretend this one is empty. It's not in here. So we're just gonna delete that. And what we want to do is type equals. So in order to find the average win per trade, we want to type equals average if, open parentheses, we go to trades tab, we select all the P&L, the profits and losses we have had for the whole month. You can choose how many trades you have taken, but most of the times I select this all the way at the end to make sure, let's say if I'm in the last days of the week, if I take more trades and I input those trades here, it will automatically calculate the average for all of them. So that's why I select all the way at the end. And once you select that, then you put comma, double quotation sign, bigger than, if it's bigger than 0, double quotation sign, and close parentheses. So basically, it will, you hit the enter, basically it will give an average wins per trade. So the same goes with all of these. That's how you you input the data. It's not complicated. It's simple. If you guys mess around, play around, you will understand this is very simple thing. You guys can do it yourself. But for this tracker, the one you guys will be getting is already preset. All you have to do is just input your data here. And as long as all your trades are within 200 trades for the month, everything will automatically pop up here for you. You don't have to do anything. All you have to do is just manually enter the trades for the day like we just did with all of these here. So that's how our compounding works, guys. I hope this was helpful. This is a really good tracker in our compounding sheet. I definitely recommend to all the new traders out there to use this or have any kind of tracker your own, but make sure you guys understand how the risk reward works. Make sure you guys have a predefined plan before entering the trades. One last thing I want to mention is that trading isn't just about entries. It's about risk management and compounding. By focusing on our multiples and strict rules, we just turned a 30K account into 45K plus in this simulation. Real world results vary, of course, no doubt. But remember, guys, math does not lie. I hope this was helpful for everyone. I hope I made the point. I hope I could help you guys to understand the sheet, how to use this, how to input all the data, everything. If you guys have any questions, drop your questions below. I will tackle them in the future videos. You guys can follow me on Twitter as Easy Trades for daily insights. Trade safe and see you next time.